Good afternoon, everyone, and thank you for choosing to spend your afternoon here with Anthony and myself. For those who don't know, I'm Patricia Ogan-Faber, and I do a podcast show to help people maximise property values. It's called Maximising Property Values. Shockingly, it's been going for 2 years. And I think last week, recorded the first episode for the 3rd year. So, yeah, amazing. I'm staggered really that I've been able to maintain it for so long. Anyway, it's on all your popular platforms. It's on Apple, Spotify, on Google, on Audible. If you go onto any of them, just search for Maximising Property Values and you will be able to find the show. That, however, usually is a monologue. So that is just me talking about my experiences and, telling people what I've discovered or what's happening with me. But since November, I've added a guest series to the podcast show. And today, my guest is Anthony Davies. So let's get to know Anthony a little bit more today. Who is Anthony? He's a qualified accountant, so he's a fellow. That means like one of the top levels within industry and large multinational IT companies. He followed that by being an international IT sales manager, and for the past 20 years, he's been a multidisciplined property investor, ranging from simple buy-to-lets to developments to private property lending and borrowing, where he helps property developers and investors make their projects happen and profitably. So, Anthony, welcome to Maximising Property Values. But before we go into your main property activities, let's get to know you better. So, first, you are an accountant. You've been in sales. For the last 20 years, you've been in property. Which was the best, ignoring your transferable skills, and why?
On doing podcasts for 2 years and having the tenacity to constantly do them and get out of your comfort zone because and go through that learning experience. It's something I haven't done, and I do admire people who do them. Answering your question, the quick answer would be property all day long. But that said, I'm really pleased I've done all 3 routes. I think in today's society, everyone wants to get to the end straight away and think it's all easy what you do, but you've got to go on, that journey as people talk about. So accountancy was good for me. I decided I want to be an accountant probably about the age of 6 or 7, which I know sounds a bit weird, but I was brought up in family business, so I knew our family accountant, etc. And wrongly, I thought accountants had a lot of money. I didn't realise at the time that they were dealing with other people's money. But anyway, I decided to become an accountant. It's a great skill to have if you're going down the business route, whatever that is. I think I remember a statistic which is 50% of all managing directors, CEOs are ex-accountants. Reason being is they tend to understand the business. They may have been the FD in the company, MD leaves and they need somebody to jump in, and it is the FD who really gets the grasps of it. Plus some businesses are run on the numbers, which I'm not saying is right or wrong. So it's been really good for me to get a grip of that. Accountancy is not my strength, or as you quite rightly said, I went through and got my fellowship. I was the FD of one of my own startups, which I floated onto the AIM stock market. And as part of that process, I applied for my fellowship and got that. Sales, I must admit, I do love sales. I just love the buzz. So I used to do, back in the late 90s and early 2000s, what I would call complex IT sales. I worked for who then ICL, the largest British IT company. They were taken over by Fujitsu. I was fortunate enough as part of that process to end up at Fujitsu's head office in Tokyo for 2 years. I then came back, did some international sales, and then I moved into Oracle, which was a different animal, much more high-pressured selling, some big ticket sales, £1 million plus sales, so not pushing out PCs or anything like that. Dealing with a lot of .coms at the time. back in 2000. So again, I learned a lot from that whole process of the sales funnel, sales pipelines, networking, etc. But I always wanted to have my own business. Never really knew what it was going to be, and one way or another, I ended up in property. And the reason I love it, I guess, and we'll come on to my lending as well, is it ticks a number of buttons for me. It still hits the accountancy side. Numbers are important. It still hits the sales side. At the end of the day, I'm looking for tenants, commercial, residential, doing negotiations with regards to land and joint ventures. But I love property because it is one of the few assets, if not the only asset, where you can truly leverage. And when you're sleeping, it is earning money for you. So that would be the one for me. Plus, generally speaking, I was at a networking event last Friday and Saturday, or an educational stroke networking event. It is full of lovely people. And through doing that, I've managed to meet lots of people throughout the UK, particularly over the last few years, bizarrely enough, with COVID. I think COVID has been great because of Zoom and lots more now of networking events and things like Clubhouse. These people are from all over the UK, all over the world. So generally speaking, you can get to know people throughout the country, and I try where I can, if I'm in that area, to try and physically catch up with people face to face and make the effort. So yeah, definitely property.
Ooh, and thank you very much for your kind words earlier. And when you said property any day, I had such a big smile on my face. Okay, now, so you told us your best and why. Which was the worst and why?
Ooh, accountancy, I would say. I am not, the problem with accountancy, and also I was initially a junior accountant, so to speak. I worked in a sales environment. I was very lucky. ICL were a superb employer. And every 6 months as a finance graduate, we were on a graduate scheme. There were 110 graduates in my year, of which only 10 of us were accountants. We did our exams every 6 months. So there's quite a bit of pressure on that. So not only working, but I spent many weekends on residential courses, cramming for my exams. What I don't like about particularly low level accounts, okay, when you get to an FD level, is the monthly routine. I'm not really a routine person. So that would be the bit I don't like about that. Sales, again, when you're working for a large corporation, you really are hammered on targets. And it is fantastic. It's probably the greatest thing ever is when you get a deal over the line. You can celebrate that. Earn significant bonuses as well. But of course, the other side to that is if it isn't going well, and you get to say halfway through the year, and you've got an annual target, or we used to have annual targets broken down, and you just know you're not going to get to your number. And then you end up switching off, and I see with a lot of sales guys, and you're already starting to plan for the following year. So you've written off 6 months of your business life, and as I say, starting for the following year. And my role in the early days, my salary was 40% basic, 60% on bonus. So it really was important to hit your numbers.
Oh, wow, wow. Now, that now leads me on to your last question, which is this. Which skills have you found the most useful and why?
People skills, absolutely people skills. Um, it's that's a great question though. I could say financial, because at the end of the day, without understanding the finances of a business, that business is unlikely to survive unless you're very, very lucky or you have people around you. It's really important to understand your numbers, and understand where that business is going. Part of accountancy is business planning, etc. And whilst I've got to admit, I don't do a business plan, which is wrong. I do have one in my head, and I should write it down. I know, and I've always managed to achieve what I've set out in my head at the beginning. But the reason I say people skills, I don't have when I took over a family business, we had 30 members of staff. I closed that business down. It was a retail business, not a business I particularly like. And I had to part ways with people who've worked for us for a long time, actually. Um, But then I've still got staff now, one in the Philippines, one in West Wales, one in Southeast Wales. And I think it's from a controlling or managing your staff and having that relationship with them to be open, honest, for them to understand you and understand what you're trying to achieve is really important. Our longest member of staff, and I did not recruit her, is sort of semi-retired now. She's only ever worked for my family. She's been with us for over 40 years, and is someone I trust pretty much with my life, if I'm honest with you. She's got access to even my private banking. That's how much I trust her. But also the other reason for people skills is, I've got quite a lot of tenants, both residential, commercial. It's important to have, in my respect, we manage all our own portfolio with the team, to have good relationships with those where possible with those tenants. But also when you're doing JVs, so joint ventures, it's getting that gut feel of people as well for me. I'm a big believer in gut feel. Whilst I'm a numbers person and data driven, I also take a lot from my gut feel. Not always right, but generally it is. And often people's gut feel is correct because it picks up on the body language, which isn't verbally communicated. And I'm a strong believer in that. So people skills for me, I think you can get over most things. You have a problem. I've done some new builds, some conversions. I will guarantee anybody, unless they're exceptionally lucky, and I've spoken to some people who are far more experienced than me, you will always have a problem if it's of any size, or at some point you will have a problem. That could be a finance problem. You've run out of funds. It could be a planning issue. It could be an on-site issue. And again, yes, knowledge is great, but if you can work with people, there's usually a solution to that. And so again, that's why I think people skills for me is important. And I just love meeting new people. My partner, interesting, you say you're quite shy. My partner's very much like you. If you probably, people probably don't, or my friends don't think she exists because during COVID they didn't meet her. She doesn't like her photograph taken, so she's not on my Facebook page, etc. And she finds it hysterical. I'll just go into a hotel, a pub, or whatever, or on a train, and I'll just talk to people. And somebody else say, "Does he know that person?" And it's like, no, he doesn't. He's just doing what he always does. So people skills. That's the long answer to that one.
Wow. So I was thinking to myself, we're very similar in that um, I don't write a business plan either, but I know it in my head. I know exactly what my figures are. I know exactly what the bottom line needs to be. I know exactly how I'm going to get from A to B. Now, if somebody said to me, put that in writing, I could do it. But because the things that I do all the time. I don't really need to put it in writing because I just know what the next step is and I know how I'm going to get there. And that just made me laugh when you said that. But where you said you can go anywhere and talk to anyone, I'm thinking, nope, definitely not me. But yeah, it's life, isn't it? You meet people and you find similarities and differences with everyone that you meet. And it was lovely meeting you the other day at the Canary Connections. So Barry, here I am plugging your network, but I'm not plugging it. It really is a lovely, lovely network. um to allow people to actually meet. So Anthony and I met for the very first time there, and it was great, and we had some really, really interesting discussions, didn't we, Anthony?
Yes, which I think will stay off the room. But anyone who's in London, look up Canary Connections, and Barry Urea is also opening up in Manchester now, coming up. And I've only ever been to Barry's event. It was the first time I went there. Lovely bunch of people. It's not expensive to go to it, and he's very. What I love, Patricia, is that, well, certainly for me, he emailed me out and. You put yourself down as a particular category. Are you an investor? Are you a professional like an architect, etc.? So people are categorized, and he tries to limit each group so it's not full of one type of person. And also, he sent me an email saying these are the sort of people. In fact, and you were on that list. He didn't know that you and I knew each other. These are the sort of people you should meet, and why. And I thought it was very well organized. So definitely one to look out for. And yeah, no, a good event.
Yes, he does do that, doesn't he? I must ask him how long it takes him to actually organise one event. And like Anthony said, they're very, very reasonably priced. It's £15 per person. Well, that's what I paid. And if you buy your tickets early, I think you get an early bird discount. I
Yeah,
don't
you
know
do.
how much that
I
is.
can't remember the
Yeah,
numbers
yeah,
on that, but
yeah,
there's definitely an early bird on it. And it is, as
yeah.
I say,
Mm.
I've gone. I haven't done networking pre-COVID. I'd stopped doing networking just because my head was down. I'm really, really busy. I've now started doing it again for various reasons, uh, and uh, and well, just meeting new people. What is funny though, Patricia, I don't know if you've had it, but at that event, I had a few people. I was talking to some people, and somebody suddenly turned around to me and said, "Are you on Clubhouse?" I go, "Yeah." She said, "I recognised your voice." She didn't recognise me, but she recognised the voice, which is an interesting way of doing it, actually.
But do you know what the thing? I remember in the very early days of Clubhouse, people saying that um, your voice was actually your how do they call it? I don't want to use the word avatar because that is more visual, but it's sort of like it's like your IP. It's like your trademark. And when people have distinctive voices, I think that pays off a lot more on Clubhouse than anywhere else. Which is why I keep saying to people, come up on stage. Well, not today, because we don't have people coming up on stage with us. But generally in other rooms, I invite people to come up on stage and find their voices, and and people who just think, oh, I'm shy. Well, I'm shy as well, and I talk a lot on Clubhouse, and you just get used to it. Well, you're not shy, Anthony, so it was never a problem for
Well,
you.
well. You say that, but do you know what? It still was outside my comfort zone in a way. And like you, we invite in our room, we invite people up, and we want them to come up. We've been in the past accused, oh, you don't let people on stage. Absolutely not, because as you know, when you're if you're running a room, it's hard work. And actually, when you have the interaction of the audience, it gives you something to talk about. You're answering their questions. We're trying to give back. Some people think there's an ulterior motive. Yes, some people may have training or mentoring or what have you, but generally we're up there because we enjoy it. I don't. Have I gained from Clubhouse? Yes, I probably have actually. But that's not my motive. I do it because I actually enjoy it. Property, as we know, can be a very lonely world. Whilst I have some people working for me, we're at different levels of what we discuss. And so I enjoy, catching up with people. And I've met some, like, you and I have been talking on Clubhouse for 18 months, I suspect. We met now physically. It's just a great way of doing it. And there's a couple of people I know on Clubhouse who are doing some great things in property, and people I've got involved with on the lending side, and they refuse to come up on stage, even though they've got a great story to tell, and they would be great. And I'm trying to get them outside their comfort zone because I know it would take them to another level, but I haven't quite got them there yet. But I'm from the audience.
Anthony, I don't know if that was me, but I just lost the tail end of what you were saying. And in any event, I was going to say, send them my way. I'll talk to them about being shy and being on Clubhouse, and just thriving on Clubhouse, and just finding your voice. And in fact, if anyone's listening to this and they don't think they can talk on Clubhouse, let me just share a tip with you as to what I do. When I'm talking on Clubhouse, I don't scroll down the room. I literally just look at myself and the people around me, and I just leave it at that. And I when I'm talking, I just think I'm talking to these people. I know these people, and it really just helps because right now, my screen just has myself and Anthony. And I know that there are some other people in the room, and there aren't that many to make me feel, apprehensive or anything like that. But nevertheless, it it's a way to help you just move forward and just do the talking. And there are some people, there's one person in particular in the room whom I'm going to start bullying to come up, because she's never, let me see, she or he, because they've never come up, and I think it will be good for them. Anyway. So, Anthony, so when developers run out of money, or they've got a lovely project that they want to do, but they don't have the money to do it, you, if the project is right for you, help them out. Now, because you're in that space, surely there must be loads of people who come to you, good, bad, and ugly. Can you just, obviously, without, on a no names basis, just talk about some of the good deals that maybe have come your way, and you can anonymize them? And I say this to people on Clubhouse. I don't need to say it to you, but I'm saying it for people, for the benefit of people who might listen to this later on, or who are in the room. Is that, sensitive information has to be guarded. And unfortunately, there have been some people on Clubhouse who've come and spoken about their deals. And the next thing, somebody's gone and stolen it because they've given too many details away, and then their deal has been easy to find, and they've not actually sewn it up before coming onto Clubhouse and talking about it. So that just flashed through my mind, and I thought, I'll say that for the benefit of people who do listen to this. Um, so, Anthony, if you wouldn't mind just giving us some examples of the good, the bads, and the uglies of, some of the things that have crossed your path. I think we'll all be able to learn so much from those.
So, thanks, and yeah, I certainly won't be sharing my as what was called a Rolodex of people I also borrow from as well, because those are my golden numbers, so to speak. So absolutely. So firstly, just for those in the audience who might not know, I am, first and foremost a property person. I've got my company's 360 Property Limited. We've got a few. I've got a group structure actually, and they're all called 360 something. My oldest company goes back to 1961, which is a family business. It's now changed from retail into property, and I do everything from buy to let, commercial, which includes offices, retail, and warehouse. I've got some short-term rentals. I've done office to or commercial to resi conversions. I've done some new builds, and I do some joint ventures and I've done some planning uplift as well. So, as Patricia said at the beginning, I'm multidisciplined. So I've walked the walk, and I was looking at this the other day, I'm still walking the walk. So I'm still doing these things. As a sideline, and it's become quite a big sideline, about a third of my business now from a profit perspective, I've ended up in the what I call private lending. Now, private lending is one of the oldest businesses going. As I once said to my bank manager, I think lending is probably as old as prostitution, to which he thought was quite funny, but I think, but it probably is. I had a conversation with my bank manager many years. Banks don't like you lending money, by the way. They really hate you lending money, particularly if you borrowed money off them and then you then lend it on. So I had a conversation with a bank manager from one of the well-known banks, and he said, Anthony, and I used to meet this guy once a quarter at a well-known hotel in Wales. We'd sit down and review my business, and I'd put this line in of lending, and every time he'd go, take that out, take that out. I don't want that in there. And we then had a conversation which went along the lines of, tell me this money, what would you do? Because it was a fair bit of my profit at this particular time. What would you do? He said, if people stopped borrowing money. And to which I responded, that's a really good question. I said, and it's a concern for me. Tell me, what would your bank do if people stopped borrowing money? I, and then it went on. He said, "Well, what would you do if these people didn't pay the money back, and they defaulted?" And once again, I went, "That's a very good question. What would you do as a bank like this?" I said, "I am no different to you in a bank. It's just I am smaller, more nimble. I do more constructive deals than you guys do because, quite rightly, a big bank, the high street banks, etc. They are dealing with large sums of monies. They have to put processes in place. You're not dealing with the decision makers. I haven't got a bank manager. I haven't had a bank manager for many, many years. The closest I've probably got is in Handelsbanken, who sort of have a bank manager, but most of them now are relationship managers who can't make decisions. I mentioned I grew up in family business. In fact, I'm in the town where my father's office was, or still is. but he's no longer with us. And we had a bank manager called Tudor Noakes, and I remember his name. He used to go in there and he could make decisions. He could lend money. Bank managers can't these days. I once, I'm quite happy to say it, I've got a fair few £1 million worth of lending off the banks. I went into the bank one day to my relationship manager and said, I need to borrow 25,000 urgently because we were doing a build project and I was running out of money. Well, that's a bit of a shock for someone doing developments. And he said to me, I can't do it. He said, the easiest thing, he said, it'll take so long with the paperwork. He said, the easiest thing for you to do, because I was obviously privately banking with him as well, as in personally, sorry. And he said, it's just take a loan overdraft from us. You can do that literally within minutes. And that's what we did. But so a different offering. So with regards to, let's start off with the ugliest. I have been lending for quite a long time, but seriously, in the last sort of 5 years, a little bit before that, I was introduced to somebody. The person who introduced me would be known to, I would say, anybody who's seriously into property will know this individual. He's one of the older trainers in the world, or in the UK, and introduced me to an individual, and I did the deal with him, a good deal, good charge, etc. I then got carried away and started to do things too quickly and without my solicitor being involved. And this particular individual is a very, very charismatic character, seems to have it all made, seems to have done some good developments, but he has a very, very checkered background. And there was always a good story why loans weren't, or interest wasn't being paid, loans weren't being repaid. And, here's another bit of lending I require for another deal, and this has happened. And it was all very, very plausible and very, very good. The guy lives in a multi-million-pound house, £4 or £5 million house, and that is not an exaggeration. The guy has recently gone into bankruptcy and he still lives in that house. There are very interesting ways that people manage to achieve this. In the end, when it all went through with him, net capital, so forgetting the interest, I was owed circa £1 million. And in theory, I lost that £1 million. I did actually on the day lose it, but through hook and by crook and being quite canny, I'd like to think, we've clawed most of that back and will actually eventually make, I'm going to say a profit. It's been, excuse my French, bloody hard work doing it. And it's been a game of chess, if I'm honest with you, and it's taken up a lot of my mental energy. But again, at the time, so he's one of the first lending deals I did, I then sat down with myself and reviewed it and thought, right, I've got a choice here. I either go, that's it, I really messed up on this, let's get out of lending because I've cocked it up. Or alternatively, what have I learned and what lessons are there and what processes do I need to put in place? And do I want to carry on doing it? And the answer is yes, I do want to carry on doing it. It ticks a number of my boxes. One of those boxes is that I want to have a business where I'm not geographically located. I could do the business from anywhere in the world if I so wished. And that's a big thing with money lending. I don't typically need to see the people. I sometimes go on site with them, have a look at their projects, but that's more because of my interest level. So that's one that went wrong, but we've turned it around, and that was all my own money. I'd like to point out nobody else's money involved. I've never ever lost anybody's money. In fact, I'd like to say I haven't lost my own money now. We've got that back. So that's the ugly side. So for those of you who think money lending is really, really easy, and why don't banks lend more money, and why don't they leverage me more, and why are they so slow? It's because things do go wrong. Typically developers can look through it through rose tinted glasses and can see the upsides. Unfortunately, there are downsides, which as lenders we've got to look at. I've had somebody who I'd lent money to, deal went very well, happy with the deal, they were happy with it. Looking at another deal, the next project, and they wanted me to lend 140% loan to value. And they couldn't see what was wrong with that because Their argument was they were going to take a property, do some renovations to it, and when we finished, we'd have been about 80% or 85% maybe loan to value from memory. So they said, well, once it's finished, what's the problem? You've got good security there. I then explained the proverbial bus that may come along the day after I've lent them the money, and I didn't want to be picking up the headache of what do we do with that property. After a long discussion around that, they then got the issue and the point regarding that. So that was the bad one. Yes, we get people coming along who try it on. They want money quickly. They don't want us to put charges in place. So just to be clear, the way we operate. Well, let me just go back actually. With regards to some of the lessons learned, is on any one deal now, I don't lend more than £250,000. If people have got deals that are bigger than that, will we look at them? Yes, we will. But what we'll then do as part of my network, I would possibly hand that off to another private lender, or I'll jointly lend with them maybe, so we're not more exposed. Rationale behind that is very simple. I don't want my eggs in one basket. I want to be able to spread that around. I also want to be active in the marketplace. So I've got another colleague who lends. They're quite happy to put their money into one deal and sit there for 12 months. So it's pretty hands off. But the problem with that for me is, you're not constantly doing deals and you're therefore forgotten about. So we're constantly doing deals. I guess to give you an indication, my loan book at the moment is about 3 million. So my business plan, which isn't written down but it's in my head, is to get that to 5 million by the end of the year. Over the weekend, I'm just closed an extra 1.5 million of private lending from private individuals. So 2 individuals who've come up with, I've got some surplus money knocking around they need to do something with. Now those relationships didn't happen overnight. One of them I've known for 40 years, so he's a school friend, and another person knows my family business, and he and I have been talking for probably about 12 months on what I do side of things. So generally speaking, so the lesson learned, as I said, is our loans tend to be between 50 and 250k. We always do business to business lending. Reason for business to business or company to company is I'm not FCA regulated, and I never want to be FCA regulated. So I can't lend to individuals. That's quite a complex area, and one that, the size of my business, I don't see us growing much beyond 5, maybe 10 million at a stretch. There's enough business out there that I can concentrate on the company to company. And also these days, particularly in property, most people have limited companies. They're buying their properties within that. But to be fair, it doesn't have to, whilst we do, all our lending is property related. The property could be bought in a personal name, but as long as they have a limited company somewhere that we can lend the monies to, that is fine. We take security either over that property or actually over properties elsewhere in your portfolio. So I sometimes talk about providing 100% lending. I'm a very open and transparent person. That's just marketing, and I'm open about it. But what I mean by 100% lending, I've done a few of these deals. I'll give you an example. One we're about to do next month. It's a rollover from another project. The chaps have found a property. I will pay 100% of the value of the property and the legal fees. I will also pay, in this particular instance, the refurb costs. And at the end, the property will be worth more. The reason I'm happy to do that is I have a first charge on the property, which is a lot easier than a second charge. And also, I have a charge over one of the directors' houses, which has got substantial equity over it, plus a couple of personal guarantees. For those who don't know about personal guarantees, be very, and if you are thinking of lending, more than happy to have a chat with anybody. Be very careful about personal guarantees. There's no register of personal guarantees. You don't know if those personal guarantees are worth anything. Even if someone has got a lot of money or appears to have a lot of money, you don't know how much they've got out there in personal guarantees. I was speaking to an old business colleague of mine who's in a very different business to me, and he's starting to sigh some breaths of relief. He, up until recently, had £1.5 million worth of personal guarantees. He's currently down to 400,000, which I still think is a lot. But be aware that even people use limited companies so that they're not liable very often. But when you go out to the mainstream banks, they will usually ask for some form of personal guarantees. I've just had to sign one now recently. I personally don't see it as a problem because the loan to value I've got with that bank is less than 60%. So they're not going to come to my personal guarantee. We're not leveraged like that. So that's the way it works. So typical deal for me tends to happen quite quickly. The quickest deals we've done would be 4 days. And both of those were quite recently, actually. I took a call in May, I think it was, on a Sunday from my solicitor, and I speak to my solicitor up till 10 o'clock at night and at weekends. It's quite surprising. But I took a call off him Sunday afternoon. A client of his who was known to me, they had bought a property with a bridge. They had to replace their bridge on the Thursday of the coming week. It was all sorted until the Friday just gone, and a private lender had pulled out at the last minute. If they didn't pay off the bridge, they were going to lose in excess of 20,000, or have to pay in excess of £20,000 worth of fees. They needed 195,000 within 4 days, and by the Sunday night, I'd found two other investors plus myself to replace the bridge, and we had the money in the solicitor's account by the Wednesday. It completed on the Thursday. Now, please do not come to me and ask me to do that every time. Trust me, that was really, really hard work, and particularly as one of my investors was a newbie, somebody I'd met via Clubhouse, funnily enough, and we'd physically met as well. He was keen to lend via me. I'd come, recommended by somebody, and he'd listened to me quite a lot on Clubhouse, and we met, and he said, these are my criteria, which are quite stringent. And this deal happened very, very quickly, as often is the case. And he was, he started to get jitters. So one of my advices to anybody, if you are out there with a project and you are trying to get or you secure private lending off an individual, fantastic, well done. And that's probably some of the cheapest money you'll probably get other than a mortgage on your own house, assuming you've negotiated right. But be really, really careful that when it comes down to it, when they're just about to press that button to move the funds into your solicitor's account, or which is where it should go, or into your own personal account, they sometimes get the wobbles. What if? Will I get my money back? Will I get my interest? So make sure you're there. That they're really happy. Make sure, even if it's come from family and friends, you have, ideally via solicitors, but you have some form of legal agreement in place. And the what ifs. What if they've said they're going to pay it back in 6 months' time? Well, what if they don't? What's the recourse on that, and how do you handle it? I've just said to you, a good friend of mine is just about to lend me some funds. Up until recently, he said he would never lend me money. The rationale behind that was he and I are very, very good friends, and he didn't want to lose the friendship. But again, he's seen what I've done. He knows what I do. We go on holidays together. We chat about each other's businesses, and for various reasons, he's got some surplus funds. And has said, look, I want to, I'm happy to give this a go. But as I say, you've got to be careful about crossing the line. With him, it'll all be done professionally. He will joint lend with me, which is something I do a lot of now, and he will also get the same security as I get, which gets around one of the problems I was having previously on that. So a lot of the people I deal with are great people. Again, going back to this gut feel thing and my people skill set, I sort of take a view on them at the time. But to say most of the people that phone me up, they come usually from a recommendation, which is great. I get this may surprise people. I get recommendations from brokers. Why are brokers coming to me, a mere private lender with a small sum of money? Because their client has done something which they can't fix quickly. And so what they do is they use me to fix the problem, and then they get that client out of the problem. So it could be, I'll give you two examples that come straight to the head. Person was building a house for cash. Always a problem when you build houses for cash, but I'll come back to that. They had a commercial property with no mortgage on it, and they were selling that commercial property. It took a lot longer than they anticipated, and they sort of buried their head in the sand. And as they were building the house, they then realised they needed money next week. And again, so not surprised, another quick deal. And the broker knew they could raise money for them, not a problem at all, very creditworthy, but they needed that money to stop the builders from walking off site. So we, rather than doing a quick and dirty deal with some lender, they came to us, we lent the funds, and that gave them some breathing space. Builders didn't walk off site, and they were then able to go to, or the broker was able to go out to the lending market and get the right deal for them. So that worked quite quickly. I mentioned about don't build houses for sites. I've only ever turned down 2 deals which I've agreed to do. So when I agree to do a deal, I always do them, except on these 2 situations. So one situation where I didn't do it was a chap had bought a plot of land for cash. He had built 3/4 of a house for cash, and he'd run out of money. And again, he needed the money very quickly. And I thought this is a no-brainer. I'm going to have a first charge over an unencumbered property. The guy was a businessman, etc. There were a few red flags that were raised by my solicitor when we started to ask questions about building control. When they start answering, sorry, what do you mean building control? When you ask about warranties on a new build, and they go, no, I don't need a warranty. I'm building it for cash and all that. You then go, right, this is interesting. For those who don't know, when you do a new build, you really do need to have a warranty. You can get an architect certificate. When we looked at the market, or when the broker I pulled into the deal to say, look, will you get a mortgage on this? So there were only 2 that he was aware of that would take an architect certificate. Our concerns were also about the legality of the house. Not that we thought it was illegal, but he didn't have certain paperwork in place. So I could have ended up with a brand new building that was illegally built that needs to be pulled down. So on that particular situation, we pulled out. Another situation which came via a broker, and he and I sort of laugh about it, is we had a foreign national who was working in a different country and living in the UK. So he was a Canadian working in America, but living in the UK, wanted to buy a house in the UK, needed some funds, and great chap on the face of it. But there were some red flags for us because the money was coming over from America. You then get into anti-money laundering, and that's a really big thing and something we take quite seriously. But we got through he got through 4 different solicitors in 4 days. And at that point, that to me raised a red flag. Why are his solicitors walking away? And we said, look, this is too onerous. We've asked for certain information off you. You've not provided to us, so we walk away. But other than those 2 instances, when I say I'll do a deal, I'll only say it when I know I've got funds, and we will do it. But clearly subject to all the legals stacking up. If you tell my solicitor or myself one thing, and then we go and look at the property that you said only has a mortgage of X on it, and we find out that there are other charges on that property, then we will potentially walk away from it unless there's an alternative solution on it. So we aim to be, I aim to be agile and quite quick on that. Very flexible as well, in that if someone gets to the end of their term that we've agreed up front, and for whatever reason, particularly you can imagine during COVID, where people were struggling with getting hold of tradespeople and supplies, we've worked with them. We've got projects which have been up to 12 months late. My view on that is, I've been there myself, and so understand, and we'll have a discussion around why. But as long as their interest is up to date, we'll work with them and try and help them as best we can. It is not my job to give advice, etc. But clearly, I'm not going to give advice if I feel I've got something to add which would help them on that side. Again, with the lending I do, if we agree a deal of, let's say, £150,000 loan, you get 150,000. It shocks a lot of people when they do bridging loans that they've applied for £150,000 loan and they actually only get 120 or something because the bridging company withholds the the term's interest up front. So those are the sort of things. I say most of the people I deal with and lend to are great people. In fact, yeah, they all are, to be honest with you. Some great people. I've got to meet some great projects. I'm on site. I'm going to site tomorrow in Bristol to meet somebody I know. It's not off Clubhouse. Somebody I know from a different networking event who wants to talk to me about potential lending and potentially JVing. And let me just put something out there. JVing and money lending are two very, very different animals. Money lending is much more straightforward in one respect, in that I lend money, you pay interest and pay the money back. I take a charge on a property, and that's the crux of it. I don't really need to know in some ways how good you are at doing your job. Clearly, I don't want the job to go wrong, because if it does go wrong, that causes lots of hassle. And we have backed away from deals where people talk about what they're doing and clearly they're outside their depth. Somebody approached me once. They were going to buy a block of flats. I can't remember how many flats were there. It was 15 or 20 flats in the block. He basically wanted me to put the deposit forward. He would get some bridging loans. I'd put the deposit in. So he had no money in. And when his plan was to title split, and when he did that, they would be worth a lot more overall. The theory is great. This individual, a lovely guy, only had a couple of buy-to-lets, had never done a title split at all, and was suddenly going from 0 to 100 miles an hour, in my opinion. And I saw that as, well, he had no skin in the game. There was nothing we could put a charge on. And I just thought, that's not the right thing to be encouraging. I don't want our money just flying out. I'd rather do it, a couple of deals I'm looking at the moment. Someone's looking to refurb a hotel. And they're also looking at doing a conversion. Again, the numbers all stack up. They know what they're doing. They've been there and seen it on that side. So that's I think some of the good, the bad, and the ugly. And I said, generally speaking, it's been good. I'm cautious of what may lie ahead for us, but because I put myself in that niche of sub 250. The reason I do that, as I said, one is because it spreads my risk, but also typically they're smaller deals that we're working on, and if they do go wrong, it's not generally as expensive or as difficult to resolve, and the losses shouldn't be as great as one of the guys I'm lending to, not on this project, but he's doing a joint venture project where he's building. It's either two, and I know it's a huge difference. It's either 200 or 300 flats. He's converting an office building into 200 or 300. He will never do that again. He's told me it's almost killed him because of the size of the deal. It was a pre-COVID deal. Things obviously changed in COVID, and it's almost he's aged dramatically and it's drained him. I really feel for him. He'd rather do smaller developments, which are a lot more nimble, easier to control, and not out of hand. So, hope that gives a initial view, Patricia.
Do you know, an amazing insight, such amazing insight into, the thought processes, the things that you look for. So I really hope that people will, pick some things up from this. And you've not told us about your best deals, but before we do that, people in the room, if you tap on the link above, that is Anthony's company, one of them, but you can, literally, get to him through the link, and the link can be accessed online if you type in www.360, so that's the digit 3, the digit 6, the digit 0, and then property.xyz, so that's www.360property.xyz. And if you go to that link and you click on the contact page, you will be able to find ways to contact Anthony. His email address is there. That is anthony@360property.xyz. And there is also a telephone number there, which is 0117 230 5600. So I tend to kind of like Anthony. I tend to read these things out because there are lots of people who listen to the podcast and they might not even get to it till next week or next month or even next year, but they will then still be able to contact you. So brilliant shares there. And also I loved the bit where you said, you are operating in your own lane. You know exactly what you want. You are in the B2B arena. You do sub 250. Anything else other people can have, the market's big enough. And also, talking about this person that who's doing either 200 or 300 units, and how that person has aged, because there's so much talk about, oh, do this, be bigger, be this, be that, and people don't tend to stop and just ask themselves the cost of doing those things, and also the cost of failure. And sometimes, you have to be of a certain age and experience to be able to be confident enough to say, well, I'm actually happy where I am. And you do what you're doing. If that's the right thing for you, fabulous. I'm doing what I'm happy doing, again, fabulous. And the two don't need to meet. But so many people think that they need to live up to some sort of ideal of always building and building and building and bigger and bigger and bigger and bigger, whereas you can be doing the smaller ones over and over and over again, and still making as much money, if not more, than the person doing a massive development. But also, and more importantly, you are able to sleep at night. So thank you so much for sharing that. So tell us about some of your best deals.
Some good points there, Patricia. And yeah, I think bigger isn't always better for everybody. And it does look like, just because someone's building loads. I've seen companies going bust um, over the years, and you go, wow, that's, you thought they were doing really, really well, and they're not. Some of my best deals. Well, here's a deal I just turned down. If anyone's got £500,000 and they want to make 150% return in 3 months, and they know about rubies, then let me know. So, as I say, here's an example of a shiny penny, which can tempt you. I do get lots of things offered to me, and it's really tempting. And saying no sometimes is difficult. So, recently I was just asked if I would lend £500,000. Somebody had bought $1.5 billion worth of rubies. And on one of those rubies was worth $60 million. But for various reasons, they need to borrow £500,000. But for that, you would get 150% return. Now that, on the face of it, and honestly, I sat down with a solicitor with this, I sat down with a broker on it, and we seriously looked at this deal. But we walked away. We had the funds, we could do it. But again, we go back to, what is my business? If someone comes to me with a property deal, I know if someone came to me with a property deal and wanted £500,000 and it was the right deal, we would fund it. But I've got, the joke between us was, we would be on Netflix this time next year, in that you cannot believe that these bright guys in the UK, because this was coming from America, by the way, these bright guys in the UK who thought they knew what they were doing, bought this rough cut diamond out of a Kinder egg, and they paid £500,000 for it. They were even willing to fly it over, etc. So, best deals. So in reality, the best deals, they've all been good. I must admit, I'd like to say I'm lucky, but as my bank manager truly said to me once, when my business is going well, it is going well now, but when it started to turn, I took over a dying business in the family business, started going well, and he turned to me and said, "You're really lucky that X, Y, and Z happened." And my response from it, and this guy's been bank manager for a long time, he's no longer my bank manager, but we still keep in touch with friends. And I turned to him and said, "Yeah, I find the harder I work, the luckier I become." And I think that's true with some of the lending I do as well. So, which is the best? I've got up to 10% return on lending per month. Now, people will go, "Wow, that's phenomenal." Bizarrely enough, the person's just texted me this morning. It was a very, very small loan. It was sub 10,000. I don't tend to do that. It's just not worth doing. It was meant to be for 1 month. It wasn't property related, and it was unsecured. Something, again, I've learned that lesson I don't do. But it was an old colleague and a friend who was in a particular situation, and it was meant to be a 1 month loan, and it ended up being, I think, from memory, 18 months. So from a returns point of view, that was phenomenal. But all I would say is, again, we go back to friends and family. We did have agreements in place. In fairness to him, he kept up with his interest payments, but we crossed a line there, and it's a line I wasn't too comfortable with, because if it was somebody, and I've funded friends who are doing property projects, there's a clear purpose. The reason I love property and funding property is that someone will come to me and say, we're doing this project. I'm thinking of one in my head at the moment. They were converting a commercial property, small commercial property, 2 1-bedroom flats and a small shop, where they needed some extra funds, which I gave them. They were then let down by another lender, and I gave them those funds. I understood all the numbers. I understood the location very well. It was an area I knew, and I was and whilst they were a friend stroke colleague, I was happy to lend them the money, because I knew where it was going, and I knew what their exit strategy was. They would rent the property out, they would get it remortgaged, and away you go. And that's what I love about it. When people, and I've been approached for various things, I mentioned the jewels, but I got approached for a bar. Somebody was going to fit out a high class bar up in Scotland. Scotland's a different world for me as well, because the legal system's different. But the problem I have with that is, if their bar goes well, fantastic. If it doesn't, the money that they've ploughed into it will become worthless overnight. They will the fit out. The next person in there will go, that doesn't to work with us. Um, but from, as I say, you talk about the bad stories more, because they're more exciting to talk about. The good stories are where I lend somebody money. They ring me up. They know exactly what they're doing. Again, I'm thinking of somebody phoned me up on a Sunday. Was a HMO investor, had quite a number of, over 10 HMOs, knew his stuff, knew exactly what he was asking for. I didn't even ask him a question. He just started to speak, finished his conversation, and he'd answered all my questions without me asking him a question. Clearly knew what he was doing. We've lent the money. He's very, very professional in what he does. He pays his interest on the nail, as do all, in fairness, as do all of the people we lend to. We always collect money on the 1st, and if we've got joint lenders, we pay on the 5th. Just gives us a schedule for weekends or bank holidays. And so it's a bit like buy to lets. It can be, if you get it right and you know what you're doing, you know what to look for, and you've all got the legalities in place, the charges. It's a bit like the buy to let market. It's pretty boring. You've got your normal tenant in, paying the rents, and you only speak to them once a year when you renew the AST, etc. Compared to, say, Airbnb, which is a daily process. I know you and I were in a room earlier on talking about that. But so those are the sort of things, we do. I guess one of the ones I've liked doing a lot, I've done my first bankruptcy deal, and we're about to come out at the end of that. There's some sad situations where people find themselves facing bankruptcy, and that's in some cases through financial incompetence. And I'm not being cruel to the particular person. They had a property which was unencumbered, not worth a fortune, sub £100,000, but their debt was probably, well, they had to borrow 55,000 from us to do the deal, to get them out of the bankruptcy. I bet you their original debt was probably no more than 30-ish thousand pounds, but by the time they put all the fees on top of the professional advisors, it will have racked up. They're now in a position they haven't had to leave their home. My colleague, I've got a co-partner on this side who deals with the bankruptcy side. He's a bit more specialist. He went and even paid them a visit. They're based up north. Lovely person, house in great condition. They didn't want to leave the house. They are now well within their terms. They're about to remortgage it and pay us off. So we'll have done slightly better than our normal rate, but only slightly. But what's really nice is, okay, I'm not going to go and ask for my knighthood or anything. But yes, we've made money from it. That's what I do. And I'm not, that's business. But what's really nice along the line, we've actually helped somebody out with that. We're looking to do some more of that, but they are a bit more complicated, and not all are in a good position. So I think, but it's nice to do those sort of deals. It's nice as well. Again, there are some great opportunities out there for people, and it's just getting them over the line for them. And they find the banks are frustrating. Banks can be exceptionally slow. For those, I'm sure most of us have tried. Um, Depending on what you're doing and what your assets are, I would class myself as pretty much AAA, and I struggle with the banks at times. It took me so long when I was doing one of my developments, and this is a true story. We had to have an analysis done by the bank on the feasibility to do a conversion. I knew my numbers, knew it was going to work. Went away, and when they came back, they said, "Right, not a problem. We'll lend you the money." I said, "I don't want the money now." I said, "In the meantime that you've been messing around, I've gone away. I've created a SaaS. I funded that from probably it was my wife at the time and myself, probably about 6 or 7 different private pensions or company pensions went into that, and we funded the development via our SaaS. They were a bit peeved because of all the time they'd taken, but that's typical banks. They are slow. They're there for a purpose. And I don't. Whilst it sounds like I'm knocking them, they're there as your core business. But when you want to do things quickly, um, that's what I would say to people. You should know people like me. If it's not me, get to know people like me, or know where can you ring up to find you might be in that 20k bracket, 50k, 100k, £250,000, whatever those figures are. Who are those people that you can talk to? Don't expect that you can just ring people up and they will give you money. It doesn't happen overnight. I have had it happen where I've met somebody and they've literally given me £250,000, and that's a true story. But generally speaking, I find that people don't get it, why they would lend money out to developers. I know in our world we think that's obvious, but outside the property world, I used to have this conversation with a few people. Would be, well, hang on a minute, why aren't the banks, if they're that good at what they do, why aren't the banks lending them money? Those of us in the world understand why that is. But so what I like is being able to make people make money. Yes, I'm never going to hide it. I'm making money, but it enables people. And a typical deal for us, I talk about a blended rate where they may be putting they've got a deal they're buying, they may be putting a bridge on that deal. They may put some of their own cash on there, but then they may be short by 50, 100, 150k, whatever the figure is, and they need that top up. And that top up is the difference between getting a deal over the line or not. And I said, well, just then blend the interest rates that you are paying on your money, your bridging money, and my money, and make sure your deal stacks up. I want, what do I want? I want repeat business. So I want my people I lend to, and I've got a number of developers, small to mid-sized developers who constantly use me. Do they just use me? Absolutely not. And I've got no problems with that. I even talk myself out of business. If I think there's a better way for somebody to fund it, I don't really want to do business. It's not I don't want to do business with them. What I mean is, if there's a better way for them, I feel morally obliged to say, look, you should be doing this. And I've got stories I could tell you where I've stopped myself lending £250,000 to £500,000 to somebody because I knew he had the funds elsewhere, but he just didn't know how to access those monies. And I explained the simple process of doing that. So those are the good ones.
Oh, thank you. So Anthony is a prime example of the kind of person that I want on the guest series. Somebody who will look at things in the round and not just selfishly from their own point of view. So, if you need funding, and anyone who's serious about property will always at some point run out of money. You've now today been introduced to Anthony Davies, and if you're in the room and you are not already following Anthony, tap on his face and follow him now. Hit the bell icon, and then whenever he's talking in a room on Clubhouse, you will get notified, and then you can go and listen some more. But yeah, on this point, and this will be available on Clubhouse for at least a week, and then it will be released as a podcast from Wednesday of next week. And Anthony, thank you so much for doing this with me. And it's been such a pleasure because you are my last guest for the next for this year. because I'm reopening next year after a 6-month break. But thank you so much. It's been fascinating just listening to you, and and again, thank you for your generosity, and for just sharing so openly with us. Thank you very, very much.
Patricia, you're more than welcome. Thanks for the questions, and genuinely mean it. My contact details, Anthony at 360property.xyz. Feel free to drop me a mail if you think I can help you with your development, and please do. If I can't, I quickly get to know, should we say. I'm quite straight talking. So thank you very much, Patricia, and enjoy your 6 months off of putting your feet up.
Oh, thank you. Only at 12 noon, only from the guest series. I'll still be on Clubhouse. No doubt you and I will talk soon. So thank you. And for people in the room, thank you guys for being here.